Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 20th, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Stocks seem to have shrugged off the news from Afghanistan and are approaching new records. And ideally, small caps should make new records to avoid further divergence, and that's quite possible now. 4 sectors hit new records this week: technologies, consumer staples, healthcare, and utilities. We'll look at a trade example very recently, trade example from Macys, up over 40% in just 4 weeks. And we'll look at Treasury bonds, which are gaining as well, so this potentially is showing that investors are more fearful now. Oil is pulling back towards a good level to buy. I'll show you that level, free of charge. And dollar is approaching 52-week highs as gold hits overhead resistance. So we'll look at this interplay of gold versus dollar, and it's quite interesting as usual. And Bitcoin, I actually bought it. So you gotta be flexible, open-minded, and look at the, chart without bias. And I'll show you what I mean there. And if you are one of my subscribers, I have 2 trading services. One is called Elite newsletter, where we trade mostly large cap stocks, ETFs, commodities, forex, and we'll look at those stocks there separately in a separate newsletter and video. And I have another paid newsletter called Speculator, and we will look at all of these stocks there. You can see there's quite a bit. So if you have not yet signed up, go over to Master Charts Trading and sign up. All right, let's get right to it. S&P 500 again at approaching all-time record highs. This right there on 16th of August. So it's 16th, I believe, or 13th. So it was over the weekend. So the fall of Afghanistan. The stock market really couldn't care less, obviously, right? Look at this. This is the fall of Afghanistan. 20 years of really, bad sacrifices, and just, I don't know, it's just bad. And the stock market doesn't care. You see what I'm trying to tell you this? So events as they happen in the world are not necessarily going to be reflected in the price of the stocks. In fact, we have no idea how they will be reflected. Sometimes these events are actually, like really terrible events are actually good for the stock market. And how do you figure which ones are going to be good and which ones are going to be terrible? So looking at this chart of S&P 500, I mean, nothing really changed. I'm looking at potential new records here. I mean, we began buying with, the signal to buy was back in April of 2020. So that was our opportunity to get in. And this would have been, the place to get in and just sit in the position, because these lines here, this is all I use. And on this chart, you can see this blue line. And I would have trailed at this blue line. In other words, if I got into the position here in April of 2020, I would have done just nothing and just advanced my stop at the blue line. And notice it has not yet been hit. So how long can this advance continue? I talked to some other traders, and they look at things like market breadth, and they're like, well, this really can't continue for much longer. And I say, I don't know that. What if it doubles from today's levels again? What if it becomes 8,000, and only then we'll pull back to the blue line? But you have to realize that this blue line is a good opportunity to buy. So if it pulls back, what is that, from today's level, for example, 10%, I would think, oh, that's a good place to buy. You see? So the bearish, what does it mean to be bearish? Bearish means that I'm thinking that this is going to continue lower. So the bearish levels are here at the yellow line. They're 23% away. Now, how likely is it that stocks will collapse that much? I don't know. But right this instant, it just doesn't look likely. So we will continue holding this position because notice again, we would have bought it back in April of last year. Same general principle applies to Dow Jones. Again, correlations are very high between S&P and Dow Jones. Can kind of clearly see it again. There's the breakout in May of 2020. A couple more opportunities as late as June of 2020. But that is it. And you can see this advance just keeps going. We don't know how high it will go. You can't pick tops, just you can't really pick bottoms. Okay, so very experienced traders can sometimes call the top, or they can sometimes call the bottom, because they can read the charts very, very well. I've been at this since like 2011, and I tell you, I don't really bother that too much. I mean, sometimes these tops or bottoms are so obvious that you just like, oh, cool. It's really obvious. Let me think of a really obvious top or bottom. GameStop. So GameStop really had an obvious top right there. There's the obvious top. Why is it obvious? Because this candle is ridiculous. Man, so big. Right there. This candle on 28th of January, it's ridiculous. It's the size of that candle. Look at the size of this candle. It's 300% large, you see. So you can kind of see it sometimes, but other than that, not really. So incidentally, we can revisit GameStop and let me see what's it doing now. I mean, I would have shorted it probably right there in July. But you know, other than that, I diverged. But overall, really, you can't really you can't really pick the top. You can't really pick the bottom, because what if the new high is made, new low is made? So don't bother. Okay, so just look at the chart. Look at the trend. The trend is clearly up. The trend is up for stocks until this yellow line is hit. Here's NASDAQ again approaching new records. Look at this, how close we are to new records. So the war in Afghanistan was priced into the stock market. The collapse of Afghanistan was priced into the stock market. I mean, it's a really cold fact, but just the market doesn't care, you see. It's like some people compare market to God, and you know, if that's one way to compare. Overall, I mean, I don't see any indication that we're about to continue to collapse here. Once again, the stocks, QQQ, the NASDAQ, the alert, the last actual opportunity was right there in April of last year, 2020, and we trail at the blue support resistance line, and we haven't yet hit it. You see, we just keep going and going and going, and what if it doubles again from here? Now, small caps is the only one that's really kind of concerning to me. Notice that we made a new high. This is small caps IWM. We made a new record here on 15th of March, and we haven't actually made a new record since. So this is the only thing that bothers me. Ideally, all three or all four, S&P, NASDAQ, Dow Jones, and small caps should make new records, but small caps haven't. So right this instant, what I'm looking for is either a pullback towards the blue support resistance, which is currently at about 200, and the bottom there, or we could just make a new record. It's also quite possible we just make a new record. So as far as fundamentals of this are concerned, again, I would urge people to just kind of ignore them for a little while. It's not that the fundamentals don't really matter, it's just we don't know how the fundamentals will affect the stock market. And there are many different events in the world that are happening simultaneously. So there is absolutely no way to grasp all of them together and make a conclusion of which way the stock market will turn. You see, so I don't even bother doing that. All I'm looking for is this. I'm looking at this price. What's it doing? Is it going up or going down? The green and red bars. I'm looking at these 4 lines, and this is all I'm looking at, you see. And based on that, I can make a great trade. So that's, for example, right there was a latest opportunity to buy 24th of September. That's a huge gain. And you can still, and you should be still holding. That's almost 50% gain, over 50% gain. And I would still be holding it because I would be trailing at the blue support resistance line. Okay, so again, today, this is XLK technology. We just made a new record high right there. You see, this is a major, sector. This is a major sector of the stock market, excuse me. Sorry about that. I don't know what's happening there. Somebody is having an alarm, I guess. So overall, again, not much we can say is that, look, alert happened right there on 30th of April, 29th of April. And we just trail higher at the blue support resistance. And it just keeps going and going higher. So we just keep our position open. Here's XLP, consumer staples. So same general principle. So latest opportunities were back in May, and as latest rather July 1st here of 2020. You see, there are the opportunities to buy, actual alerts too. And these are new record highs today, or rather a few days ago. Let me show you. Right there, new record high, 17th of August. You see, so and then another one right there, utilities. This is 52-week highs. Actually, a recent trade we bought right there, 28th of June. That's a nice gain, and look how nicely it went immediately in our favor. So what I'm trying to say is we have 4 sectors: technology, consumer staples, utilities, and healthcare, that just hit a new record. I think the overall stock market is going to hit new record pretty soon, you see. So all of these events, all of these things that are happening in the world are somewhat, you can't see them on this chart, you see. You cannot correlate events to the price action. I guess that's what I'm trying to say. All right, a recent trade. Here's Macys. So from my speculator newsletter. So why is it speculative? Why is it in a different newsletter than the elite newsletter? So the pattern I look for is I look for a very oversold stock. So Macys in this case, conceivably was still in an uptrend back in 2018. You can see it was above the blue line here, but then it just kind of dragged, and then here in January 2019, right there where I'm hovering, it went into a bear market, and since then it was just making new lows and new lows and new lows. Something happened. It stopped making new lows here in 2020, and kind of just traded sideways. Something happened again here. You can see we overcame resistance 23rd of November. We broke above the red line, but the most important thing right there is that breakout into the bull market. So I didn't send an alert on that particular day, probably because I wasn't really watching it, or it didn't come up on our scanner. But you can see that even then that would have been a successful trade. And then two more alerts that I sent out. One was right there on the 8th of April. Actually, this is a successful trade, went to target for sure. And then this latest one, just very nice trade. Again, alert I sent was 20th of July right there, and that's a 40% gain. It went from 16 to like 22.5. So this is the type of breakout. So I like to see the stock was below the yellow support resistance line, basically new lows, and then it broke out into the bull market by closing above the blue support resistance line. Again, they're available. You can just find out more by clicking in the description of the video of how to get the same lines on your chart. So this is the type of trade we do at one of my services called Speculator. Right, switching gears, we're looking at bonds now. So TLT Treasuries went into a bear market right there on 6th of January, date of the riot in the capital. Some of my traders actually got in on 27th of January on the short side, made a huge amount of money here. Now, another alert was sent, another bearish signal right there where I'm hovering on the 9th of July. But so far it really hasn't gone anywhere. In fact, it's going the opposite direction. Now if we project my lines into the future with a 6.0 version, so now we have 6.0 version, you can kind of see that the lines are kind of getting closer and closer to the price action. So what this is telling me is that there's a possibility that bonds will break out into a bull market. And in other words, they will stop making lower lows and lower highs and begin making higher highs and higher lows. Will it actually happen? We will need to, watch and see. But there is a good chance of that. So usually bonds and stocks correlate negatively to one another. When stocks go up, bonds go down, especially treasury bonds. In this case, yes, it's possible, and generally speaking, the way to think about treasury bonds, when people are buying treasury bonds, that they think that there is more fear in the markets. The fear is increasing, and this is understandable with all the craziness going on in the world, with the Delta variant and the various issues with Afghanistan, obviously, and all kinds of issues that we're having here in the United States and the world as well. So treasuries are getting more expensive. In other words, people are kind of worried about the future. How worried are they going to be? Are they going to be worried enough to push the security into a bull market? We'll see very soon, actually. So far, I'm seeing a possibility of this short or bearish signal failure, but it hasn't yet failed. So let's be patient and see what happens. Okay, I haven't covered oil in a little while, actually a long while, because the latest signal to buy oil was right there back in May of 2020, so a while back. And again, you can see that if you bought oil back there, I don't know if you have futures account or whatever, or very far out options like 2 years out, yeah, I would have still, held it at the blue line. You see, I would have trailed at the blue line. So now what we're seeing is we're finally seeing some sort of a pullback. And this is a tradable pullback. So why is it a tradable pullback? Because this is clearly a bullish security, because it hasn't yet. Okay, so for commodities and forex, I use the blue and red line. For stocks, I use the blue and yellow line. Okay, so if you're interested, I can explain it all. Go to my site and there's an explanation there. But for commodities, we use the blue and red line. So once it gets to the blue line, we can think about buying it. So looking at this chart, it's about $60. So if it hits $60 and like bottoms here, it would be an interesting opportunity to buy it. Okay, so we're actually looking at oil companies as well. I think oil companies are front running this potential bounce, and if it bounces here, we can go to new records, new 52-week highs. So that's oil for you. Okay, very briefly, DXY, dollar currency index. So dollar has broken into the bull market right there on July 13th. We had 3 really good signals. Latest one already, you can see that it's definitely moving in the right direction. So dollar and gold, you can't really trade this DXY index, but dollar and gold, the gold is traded in dollars, so it's XAU divided by USD. So once again, if the lower part of this equation gets bigger, that means it will pull this currency pair lower. So the bigger the dollar gets, the weaker the gold becomes. And you can see the gold is currently at resistance. So we're looking at resistance. You see how it continuously hit this red line. Today also it hit this red line. So far it hasn't been able to get above it. So we need to watch and see what happens. And the way dollar is looking, there is a good chance it will pull back slightly. So I'm watching and seeing what will gold do. So if it moves higher, and then if it moves higher and then again rolls over and closes below this red support resistance line, we can project into the future. So let's say it moves a little bit higher and then closes below it, kind of like what we saw here. So you see it moved above it and then closed below it, and then you can short it and close below it. So let's see if it does that. And the way dollar is looking, it's really possible. It's possible dollar will pull back a little bit, which will kind of strengthen gold for a little while. Again, because gold divided by US dollar, the lower part of this equation gets a little bit smaller, gold will get a little bit bigger. So that's a good chance gold will move slightly higher, but then we'll need to watch and see if if it rolls over. I'm bearish on gold right now in general. And here's Bitcoin. So Bitcoin, I shorted Bitcoin a while back, right there, on 13th of July. Clearly I was completely wrong. Rather, I was right, but not right enough. So it moved in my favor. I should have, just kind of closed my position. I didn't. I got stopped out way up here on 13th of August. Okay. And now what I did is so now I was definitely wrong. I'm reversing my thinking. Now I want to be buying Bitcoin. So I bought Bitcoin today at 48,567. I think it could go to new records easily. Again, it's not that I hate Bitcoin or I love Bitcoin. Here, when I was shorting Bitcoin, people were calling me Bitcoin hater. And I'm like, I don't care. It's just numbers on the screen. So again, I don't really hate or love anything I trade. It's just stuff on lines. It's just lines and numbers. I can't really love or hate numbers. So anyway, so here what we're seeing is if I'm correct, so we can look at depth of pattern. So I don't know where the depth of pattern, but maybe this is the depth of pattern. So if that's the depth of pattern from from the lows here to the current breakout, so maybe this is like a cup or something like this nature. If that happens, then we can easily see about similar move, which would put us into new records above the previous highs, and then sky is the limit. So let's hope it will. Okay. Now I'm bullish on Bitcoin. Again, flexibility. When you're trading, you have to be extremely flexible. you cannot be married to one side or the other. You know, you have to be flexible. What can I say? All right, that's it for this week's recap. Head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. I have three different services, service levels. So trading indicators are these lines on the chart. And so, for example, you know, how to trade it on Macys. This is what we're doing. We're just buying and close above the blue line. You know, the stock touched the blue line and then closed above it. We buy it right there. That's a 40% gain. And you don't really have to think too much. You just follow the lines. Okay, it's really easy. So those are just the lines. Indicators and newsletters. So the newsletters are, like I said, I have elite newsletter and speculator newsletters, and we cover just different stocks. Again, in elite we cover mostly large caps, ETFs, commodities, and forex, while in the speculator newsletter we cover all kinds of new stocks that are breaking out into the new bullish trend. Okay, so you can see there's many of them. Additionally, if you want to have a scanner, so the scanner is a stock screener. What it does is it finds stocks like that, you know, for example, that are breaking above the blue line. So this screener is now available. It's only, you know, extra $10, but I think it's very useful, and you can, you know, trade. You can set whatever parameters you like. You can see there's many different lists. My personal again favorite is all stocks with options. So this is what I use to send alerts to the speculator list. And I, you know, obviously not gonna send 138 alerts per day. I pick and choose what I'm looking at. I look at specific kind of patterns, and this is the type of patterns I absolutely love. You know, stock was below this yellow support resistance, basically 52-week lows, and now it's in a new uptrend. So this is the kind of new uptrend security. Additionally, we now have the indicators available for MetaTrader 5.0. You can sign up on the website there. All right, that's it for this week's recap. Again, if you have any questions, please let me know. Thank you for watching, and have another great trading week. Bye-bye.